Good afternoon, everybody. Good afternoon. Welcome back to another episode of Mortgage Matters. My name is Stephen Padernacht of the Padernacht Real Estate Team here at Keller Williams in the Bronx. And we are here today to do what we always do, and that is talk mortgages, real estate, buyers, sellers, and market data. I am going to introduce my co-host, Mr. Babcock. What's up, Christian?
What is up?
How you doing, my man?
I'm good. How are you?
I'm doing great, doing great. So we're here to talk mortgages, market data, real estate, buyers, sellers.
All right.
Did I
I'm
hit
in.
did I hit everything?
I'm down. I'm down. Yeah, you got it. Just don't talk about politics.
No, 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 no. No, no, no. I think the only political talk we'll do is maybe what's happening in the market since Tuesday,
Yeah.
post-election, and maybe we'll dive into a little bit about what we think might happen in the upcoming quarter, maybe the end of Q4, beginning Q1. But yeah, I listen, red, blue, green, whatever you are, I honestly could care less.
Yeah.
Everybody's entitled to their own opinions.
Same.
Everybody's entitled to vote how they want to vote. There was millions of people have died for the right to people to be able to go to those ballot boxes.
Mhm.
And the results speak, and that's it. And I saw a meme that said, if you are not happy with the election results and you want to move out, give me
Yeah.
a call. I could still sell your house.
Yeah, I know there's a million. So many agents are posting that. That's getting going around with the real estate agents. It's so funny. But yeah, no, I'm in the same camp. I mean, it's say exactly what you're saying. I mean, regardless of affiliations, we do have to talk about it because it does impact our lives and our business. I mean, and people, I don't think give that enough credit until they're in it. For example, just got off the phone actually with a client of mine that's closing next week, and she's an immigrant, and we were having the discussion around rates, and she's trying to understand how things work, and I'm trying to educate her on how it works, and that came into the conversation. Like, look, that policies matter. I mean, we vote vote people in, and it does impact your life directly. It impacts prices, it impacts interest rates, and I don't think again, until people really are starting to have families, buying a home, and really getting involved in the economy, it's when they start paying attention. And again,
Yes.
Doesn't matter to me what your affiliation is, doesn't matter to me who you voted for. I'm still going to be your friend.
Yep.
And we're still gonna do our business, and we're still gonna do what we got to do.
I don't know about you, but like I had to stop myself a few times, over the course of the past couple months, because like I'd start like I'd see like a really, really ignorant sort of comment, and you really see people's true colors. And I'd start replying, and then I'd say, "Wait a second, what am I doing?
Do it.
What am I doing? Let me time out, buddy. What am I doing? I am not going to get caught up in the online banter and the back and forth. And I personally feel like if you are not happy here, then you don't have to stay here. That's the beauty of it.
Or vote, get involved, feel that strongly, get involved, knock on doors, get people to vote your way, make change happen, because you can, and
to go even more extreme, like we could all run for office if you want to.
Right. No, exactly. So, but and it's funny that you mentioned about people dying and everything else. Veterans Day is right around the corner, so I always, I do want to touch on VA loans, because just to we don't have to involve the whole half hour on it, but just to remind people that we do VA loans. We are a huge VA lender. We have a huge push. We just brought in a whole new department specifically for national VA financing and getting the word out to veterans about the benefit that just so many of them don't even know that it exists. So if you are a veteran, thank you for your service. If you know a veteran, that is even considering buying a house, let them know that they have some seriously good benefits to buy a home, and as they should. So just, I'll leave it there, because again, Veterans Day is there. Maybe next week we can do more detail about VA loans again. But it's a great. I love doing VA loans. Love doing them. No,
I
so
mean, you and I are cut from a very similar cloth where it's like, first responders, veterans, people who like put their lives on the line every single day
right,
should have different these first responders and veterans, they should have a way for themselves to be able to kind of, I don't want to say skip the line, but have added benefits to
yeah,
become homeowners and to take part in the wealth of that is out there. And I really do agree with you that not enough people take advantage of it. And I think it's just an education, and they're
yeah,
just not exposed to it, and they don't know. And a lot of things we talk about here in Keller Williams are like limiting beliefs.
hmm,
And you get a new agent that comes in and they're like, they see an experienced agent who's making whatever, 10, 15 deals a year, and they're like, oh, I can never get to that point. Well,
yeah,
if you start off at that point, you're right, you're never going to get there. If you start off thinking, hey, I'm never going to be able to buy a house, I'm just going to be a renter my entire life, like
right,
that's where you're going to stay. Whether you think you can or you can't, the old
hmm,
expression is you're probably right.
exactly right, exactly right. So but the yeah, I mean, so we're doing a huge national push for VA loans, just to let get obviously to do that business, but to get the word out to veterans on a national level, and because we have coverage in all 50 states, no Home Depot, so you'll be seeing a lot more of it.
Good.
Um,
Well, I
sure.
watched the World Series, and I was heavily impressed with every time I turned around. I was looking at my lending partner. I was like,
Yeah, you couldn't during the ICLS. I mean, you literally couldn't get an angle that didn't say Home Depot on it. Like,
yeah, it was,
it's like everything, like behind home plate, on home plate, like
yeah.
it was great. That kind of national branding is really great. It's
You know, it's
expensive.
it's helped my conversations too, right? I was on a call
Mhm.
2 days ago with a buyer's consultation, and I was going through the process, and I'm like, hey, listen, so I have a preferred lender that I would recommend. You're not pre-approved yet, and and I said, and they were like, well, who's your lender? I was like, well, let me ask you a question. You're a baseball fan? You watch the World Series? I was like, you see that brand right there, Loan Depot? I was like, that's them. And, and then, of course, I follow it up with, and they were like, oh, but they're like, you just said like big banks and blah, blah, blah. I'm like, yeah, but this is different because we have direct access to a branch manager, a regional high up, and the underwriting department, and so on and so forth, and all the benefits that come along with doing business with you and your company.
Yeah.
And they were definitely open to the idea. Obviously, I can't, force it, but, it just,
The water, so, but no, it's
that
great.
branding helps though, man. That branding.
100%. Coke and Pepsi still spend billions of dollars on marketing, and they don't have to, but they
Yeah.
do. Because it's branding. So that's what we're looking to do.
All right, do me a favor. Just I don't want to leave VA loans real quick. Give me the quick rundown, just for anybody who's not aware. What benefits, pros? I don't really think there's any cons, but give me some pros and just give me some quick, like, overarching stuff for the VA loans.
Well, there's a couple even different loan programs. So the VA obviously is the main one that we're talking about, and the VA, the Department of Veteran Affairs, basically just insures VA loans. So they don't produce the loan; they insure the loan. They insure the veteran, which allows them to finance up to 100% of the purchase price. So it's really the only loan without breaking loans up into two and everything else. It's really the only loan that has on one loan allows you to do 100% financing.
Yep.
It will allow you to roll in the closing costs with the seller's concession. So I've had 104% financing on some of them. Back when we were able to do seller's concessions with sellers, but so it allow you to do 100% financing, but there's also no PMI. That's the big one. So if you're doing an FHA loan, or a $500,000-$600,000 FHA loan, you could be paying an additional $300+ in mortgage insurance as part of your payment.
Or any loan less than 20% down. Right? It
Right.
could be a
I mentioned
conventional.
FHA because it's another government loan. It's so, but it's that's backed by the Federal Housing Administration, but the VA is backed by the Department of Veteran Affairs. So they provide the insurance that allows the veteran to purchase a home with 100% financing. So that's really the main benefit. Now there is another one that a lot of people don't know about, which is, and you've heard me talk about Sony May a million times, which is State of New York Mortgage Agency. They do have a veteran benefit also, and where that one works out well because they have the down payment assistance of 3%, and they don't increase the interest rate for a veteran taking the assistance. So Sony May will give up to $15,000 in down payment assistance, and for a veteran, they keep the rate at their lowest possible rate, which right now I think is like 6% flat, and where regular rates are 7%. So that's also through Sony May. So we can and there's nuances of either one, which would be one better than for the veteran than the other, but they do both exist. But those are the main features.
So you've got up to 100% financing, possibly more, depending on the seller's concession, to roll some closing costs in there. You've got no PMI, and I believe there's also they're transferable, right?
Yes, they're assumable. Yeah.
So how does that work? Just for the people who are not so familiar with it.
So if you're selling your home and you have an existing VA loan and you owe, let's say, $400,000 on your mortgage, your buyer can assume that mortgage with that interest rate. So, potentially if a veteran bought a house in 2020 and 2021, and they have a 2.5% interest rate, the buyer can assume that loan. Now they do have to pay the difference of the balance of the loan and the purchase price. Yeah. But they can assume the loan with the interest rate and everything else. And we've seen some of those happening. With increased prices, I think, it became very popular. People were really, really talking about assumable mortgages for a minute, because when rates were up high, everybody's really looking for strategies to try to sell a home with a low interest rate. But I think it's lost a little steam because values are up so high that, people might only owe 50% left on their mortgage, and now your buyer has to come up with the other 50%. So it's, but it is something that's out there, and it is a feature of a VA loan for sure.
Do you see any sort of so obviously when the loan is assumable, do you see any sort of like secondary loan? Do you guys do something like that, just so that way they don't have to?
I haven't seen that. No, I've been asked that question, but I don't know that it's possible, because it's assuming the servicer that has that loan. There's still a process when you assume a mortgage. Like you have to put together an application. They have to make sure that you can obviously afford the payment and things like that. I don't know anyone that's tried to put a mortgage behind it, but I've been asked that question before. I really don't know.
Also, what I learned recently, and I can't believe I didn't know this, and I guess it's maybe because I'm not really involved in, I don't really get involved with like day trading and stocks and so on and so forth. But I was talking to a buyer, and they were saying, so we have down payment money. We're going to borrow against our securities. And I didn't realize that the big houses, the TD Ameritrades and the Schwabs and all these people, like if you have a significant amount of money in securities, they'll give you a loan on that. And I'm just curious, for somebody who's assuming a VA loan, they could probably use that loan as their secondary loan.
100%. Yes. That I wouldn't even have thought of that without you saying it. But yeah, if you have. And what's good about those loans is that you don't have to sell the security. So, because it's a loan, it's just like any other loan. It's not taxed. So, you're paying an interest rate. You are making a payment, but you're basically almost paying yourself. I mean, you're paying the bank that holds that line of credit. They're making the interest, but, you don't, but then it basically freezes the account. Like you can't sell, some of the securities, and they're very conservative. Some of them will only give you 50-60% of the total value of the account because they're worried about downturns.
Of course.
So to your point, you have to have a decent amount of money in there for it to be worthwhile and have a big chunk come out on a loan. But yeah, that would work.
Yeah. And, another thing, is if somebody has a life insurance policy that's accrued a lot of cash value.
Yeah, whole life policy. Yeah.
Yeah, whole life policies that are, so like there's so many different options out there, and I'm really glad that you brought that up. Monday morning I'm going to an event for a veterans event. We have in Riverdale. There's a veterans garden. It's called. It's really just a small space that was ignored for a very long time by whoever, the city or parks department or whatever. And a local group of veterans have over the past 2 or 3 years put a lot of time and energy, really all volunteered and fundraised from the community to kind of build it up. They have a flag ceremony. They have all these things. So when I'm there, I'm absolutely going to be talking about the VA loans with some of the people that are there if it comes up. I don't like to go to those events and just start throwing out like, hey, buy a house, sell a house. But it's good to have that in my back pocket,
Yeah. Where is that park?
It's at the top of Riverdale Avenue but South Riverdale. So do you know where the monument is? Like just north, like 230th Street?
Yeah.
Yeah, I think it's 239th and Riverdale Avenue.
Okay. Yep. Know exactly where that is. Nice.
Yeah. So, all right, cool. So VA loans, veterans, if you're listening, if you know a vet, please send them our information. We're happy to just educate somebody, even if they don't, aren't ready to pull the trigger right now. It's an amazing program for people who have sacrificed or at least made the ultimate sacrifice to possibly lose their life in defense of the country.
The other benefit of the VA loan, if you have one already, is that they allow you to do up to 100% on a cash out refinance also. So what a cash out refinance is if you have an existing mortgage, so again, let's say you owe 400,000 and your house is worth, 800,000, that means you currently owe 50% of the equity, 50% of the value of that house is, if you have 50% equity, you owe the other 50%. So on most loans, if you want to do a cash out refinance is a new mortgage that's going to pay off the existing mortgage, and then you can take additional money on top of that. So you owe 400, you take a new loan of 500, you pay off the 4, you put 100 in the bank.
Or pay your kids college.
Pay college, whatever you want to use it for. A lot of times use it to consolidate other debt. They may have a second.
I knew you were going to say that. You love that. I love it. Yeah.
Right. I believe I've saved people thousands and thousands of dollars by using cash out refinances. So, now in where we are now, the downside to cash out refinances, if you got a 2.5% interest rate, you're not going to trade that up to a 6.5% interest rate on a cash out refinance, which is where second mortgages come in, and we do those too.
Yeah.
But the point is, on the VA loan, other loans only allow you to finance up to 80% of the value of the house. So you're limited on how much cash you can take out of the equity on a cash out refinance. The VA allows you to go right up to 100% of the value of the house on cash out too.
When did they start doing VA loans? How long ago? Any idea?
As long as I'm doing it. So.
Yeah. Well, I'm just
curious. Google that one. I don't know exactly the exact date of the
administration, or when in this country did they say, you know what, we have to do something to support these people? That's kind of where I was, leaning.
Google on that. We'll get the answer to that one next week on next Friday.
All right, cool. All right, so let's switch topics a little bit. Let's go to just some recent news. Obviously, we know we have a new administration coming in. I personally saw a lot of activity in the securities market, stocks going through the roof, Bitcoin, crypto going through the roof. I did see it's funny, I saw a spike in rates last week, but now I'm hearing that there might be some sort of cut coming again. So can you just kind of bring me up to date on where we're at right now and what we could, maybe look forward to?
So they have been running up for the most part every day in the month of October. We caught a really nice dip in September. 30-year fixed rates hit in the 5s. It's great. We thought the dam had finally broke, and we were really going to start seeing rates come down. Then we got a really hot jobs report shortly after that, which caused them to really go the other way very fast. And then for the last 2 weeks ahead of the election was really just a result of running up into the election, because the bond market was pricing in a Republican sweep. So when they start pricing that in, when you're talking about a Republican sweep, again, regardless of affiliation, but just from the talk about tax cuts, tariffs, and basically things that can cause future inflation. These are inflationary pressures. That's why the rates were starting to go up, because they were saying, okay, if the Republicans win everything and they pass these things, it could cause future inflation, which is why rates were going up. So from the articles that I was reading, there was all these different outcomes. Okay, if Trump wins the White House and the Republicans get everything, rates will probably go up a little more after the election before they start kind of like cooling down maybe a little bit, which is exactly what happened. There were other things where if Harris won the White House, but everything else was divided, didn't have the House, didn't have Congress, all that other stuff. So there was all different scenarios playing out, but the one that they were really betting on was a Republican sweep, which is why the rates were going up. And then one article that I read was exactly spot on. They said if that happens, they'll go up a little more right after the election, which they did. Wednesday they went up a little more, and then yesterday it's starting to cool off. And who knows? I mean, as the dust starts to settle, and we have an inflation report coming out next Wednesday. We'll see how that looks. But again, it's all based on future inflation and jobs is really what the Federal Reserve is looking at to try to hit their 2% target. They did make a cut to the Fed funds rate yesterday, another 25 basis points, which will help your credit cards. It'll help home equities. It'll help car loans, things like that are directly impacted, and it will help mortgage rates eventually because it's basically the cost that institutions are borrowing from each other. It's the overnight rate is what they're cutting. So that will eventually trickle down into lower rates, and they're planning on maybe another cut in December, another 25 basis points. There's some talk about maybe not. And then, again, planning on cutting well into next year if the fundamentals are pointing in the direction that the Fed is looking for.
I'm looking just now, and today I'm just looking on a I don't know what site this is, but whatever. It's showing that a 30-year fixed is right at around 6.92 right now. And back in September, what you were talking about, it got all the way down to this is showing like a 6.1. So like that's almost a full point. It went up a full point, and now it looks like it's trending down again. And you're saying that they announced a cut yesterday. Is that it?
That's right. Yeah. They cut 25 basis points, and they're planning on doing another 25 in December.
Okay. All right. So if I know you don't have the crystal ball, I know you talked about the non-crystal ball, but if you had to make a guesstimate, and not to put you on the spot here, but do you think that we're going to get back down to those like the high fives, low sixes in the next quarter?
I hope. Yes.
Yeah.
Been saying it for 2 years. Yes, we hope. But there's just too much going on in the world right now to predict what's even going to happen tomorrow. And I say it to my customers all the time. Like, all we can do is react. I try not to get into the prediction business, especially after being beaten over the head so many times in the last 2 years. But what I do well is pay attention. I'm up early. I watch the reports. I know exactly which direction things are going, and I do try to catch the dips for my clients within a period of time where they're actually going to be closing. But a lot of it is just luck and timing, and where we can go. I mean, I've definitely saved people money over the last 2 years by catching the dips. I've had a lot of happy clients, and I've had some, not so happy clients because their closings got dragged on for whatever reason, and we locked later and rates jumped. So, but I do always try to do the best, obviously, for every person that we talk to and get them the best we can. It's our main driver.
Can only control what you can control, right?
Right. Exactly. So, but again, there are forecasts that come out, and especially over the last 6 to 8 months, I mean, the forecasts have been wrong a lot, so, even when we think a report's going to come out the next day and it's going to come out in our favor and that can help rates, comes out the exact opposite, which is what happened in January, and then just run up again. So
what are the next set of reports that are coming out, and when are they coming out?
There's an inflation report next Wednesday is really, I think, the only significant one on the calendar there's a couple in between, but that's really the bigger one. So, we'll see if it's getting closer to their target.
The target is what, 2%, right?
Yep. So, but Powell was saying yesterday, core inflation is still elevated. It's not where they want it to be. So, you can argue whether or not they should have even made the 25 basis point cut yesterday, but they did. And, we'll see.
What exactly is core inflation? What does that mean?
It's the cost of goods and services, basically. Stripping out energy and I think food.
Yeah, gotcha. So hopefully going into 2025, people will start seeing some. The grocery bill won't be so crazy, right? Hopefully.
Yeah. I mean, some of those things have come down too, and some of them probably could come down, but places just aren't low in prices, because people are used to paying it. I mean, if you're making a profit, I wouldn't necessarily say they're gouging, but just like, I mean, if you're selling something for $10 and you can, the wholesaler or whatever, if you're buying it for $5 and you're still can sell it for $10, you're still going to sell it for $10. I don't think anybody's really in a rush to lower prices, because they got to make up some of the losses that they've made also. So when it comes to retail goods like that, you really just don't know if what they're getting what they're buying it for and what they're reselling it. So I think that some things could probably already be lower priced, and eventually will. Just like anything else, if they have an oversupply, they're gonna have to lower the price to get rid of it.
Of course,
So
of course.
but that's why like things like food, you really can't. People need food. So it's like energy. We need energy. But disposable consumer goods, obviously, they'll be eventually sellers will have an oversupply and they'll have to lower price to get rid of it.
Gotcha. I saw something that I don't know where it was, but I get so many articles that come in my inbox, but something along the lines of with the new administration coming in, the Powell, who's been there, how many years Powell been there? Been this longer than this administration, right?
At least I think 6, at least.
Yeah. So they're saying that he's going to have that he might have a more difficult time now dealing with this administration because they're going to be a lot more involved and trying to push an agenda.
Well, it was funny. Like he was asked in the press conference yesterday, and I was watching most of it, and it was just a great comment the way that he did it, because one of the reporters asked him, the administration is saying that you should resign. If they ask you to resign, will you resign? And he just literally just went, no. Elaborate, and they even asked him to elaborate, and he just went, no.
I was reading another article, and I like to bring up all these articles when I'm talking to you. I saw something just on the commercial front and about how banks have adapted this style of restructuring loans and kicking the can down the road in the hopes that the rates are going to go down. But now that might have been a bad strategy because a lot of these short-term sort of fixes or band-aids haven't really done much. Kick the can down the road, and it's going to could lead to a tremendous amount of commercial mortgages now defaulting.
Well, very much like COVID, it's just taking a lot longer than anybody hoped or expected to go away. So, if you remember COVID, stay home for 6 weeks, and everybody thought the world was just going to go back to normal in 6 weeks.
The curve.
Right. Oh, but I mean, that's just also our culture. Like everybody's so into immediate gratification. You can get anything you want within 24 hours. So it's like, oh, wait, there's a problem. Okay, let's fix it. How long is it going to take to fix? 6 weeks. No problem.
Yeah.
That was completely unrealistic expectation. So inflation is a very similar situation. Like you make a change, but then you have to wait a long time, just like a ripple. It's a ripple effect. You drop a pebble in the water, and you look at it's got to ripple out. So and that's the part that takes time. It's not, none of this is an immediate fix. Nobody's going to just make one change and all of a sudden everything snaps back to normal in a day.
These are the lag indicators, right? Lead and lag indicators.
Right. There's several 100 million people in this country, and forget the world, and that's got to ripple out, and things got to slow down. They're trying to slow down the economy, try to get inflation under control without crashing it at the same time. Because they could have crashed it. They could have just raised rates so high that it could have caused a recession, but they don't want to do that. So,
man, this guy Powell doesn't have an easy job, huh?
I don't know how he sleeps at night. I don't know any of these guys sleep at night.
Man. All right. Well, listen, I appreciate your time today. We're just coming up on our 30-minute mark. I appreciate your time, and I will see you next week.
You got it, man. Thank you.
Take care.
All right, bye.